We get into the market movement, right? And it certainly has been quite a different one, if you want to call it that, today. Of course, we're just hours away, if you want to say that. Tomorrow is the day when Joe Biden takes office out in the United States. Very interesting just how things are panning out over there. President right now, of course, Donald Trump, doesn't look to be helping out in any particular way. Will set to leave the White House very early, and he's planning to have what looks like a farewell party at the Kennedy airspace then a little bit later on in that morning. Around 8 a.m., can you believe it, is when he's planning to have sort of a farewell party, even inviting a few people to have a look at how things fare there. So quite interesting how things will fare out towards the close of Donald Trump's presidency. But also other news that has certainly been making the rounds. China's economy growing, of course, as one of the few that have grown in 2020, has meant that there's positivity for them, particularly out in Asia. And it does mean that perhaps an opening up of global economies means that things will fare a little bit better across the global spectrum, and you're seeing that positivity filter through to many of the markets. The Hang Seng out in Hong Kong going up 2.7%. It's 0.8% weaker, unfortunately, is the Shanghai Composite, but the Nikkei did manage to eke out some gains. That mixed picture is pretty much the same out in Europe as well, but you're seeing a mainly positive board. Only the CAC 40 perhaps a little bit weary, sitting at pretty much flat stance. It's currently nearly 2 points higher at present, but around 0.25% gain for the FTSE 100 in London and the DAX out in Germany too. So this positivity though has filtered through to our local index. It looks like we're headed for 64,000 points. Do we get to 65 in this first quarter as well? It's perhaps the question mark on the lips of many. Nearly 200 points gained, in fact, overall for the JSE all share today, and a lot of that gain has actually been led, much like yesterday, by the industrial counters, which have gained 0.2%. If I speak of the industrial counters, just looking at the top of the gainers board today, I have City Lodge, which, yes, fine, is one of the hotel brands as well, but you have Blue Label Telecoms as well. Textainer also going up quite prodigiously out in that front. So that's pushed a lot of the industrials going higher as well. The Asian market also helping because of tech counters, of course, helping Naspers push along in some instance too. Some positivity too for the platinum miners as they go up 2 2/3% there, sitting higher today. Gold miners, unfortunately, doing quite the opposite, 1 1/10% weaker. Overall, that has meant that resources have gone down 0.2% today. Of course, the diversified miners are still set to come into that figure, and that's why you're seeing it go down by around 0.2% there. The financials have gone up 0.2%, so not too much to write home about there, but it all comes from the banking shares, which have performed a whole lot better today. The listed property stocks also enjoying some positivity, 0.4% stronger. We've spoken about the gainers. Let's talk about the losers for now. African Rainbow Capital losing 3.6% today, so not necessarily a good trading day across the board for them. And a lot of these will come from the resource stocks. Those gold miners will certainly be some of the losers on this red board then today as well. On your currency picture, well, a much better currency stance by the looks of it. 1.4% is how much the South African currency has gained against the US dollar. Perhaps you could say how much weakness the US dollar has had against the South African currency. A lot of the movement has certainly been around where exactly the US dollar sits in the midst of all of this. Considering South Africa's own financial woes and issues, it may be very important to state that it is unlikely for South Africa's currency to have been the better mark here, but really the US dollar having fared a little bit weaker, considering the stance of the global sphere at present. Under 15 Rand, back under 15 Rand we go now, 14 Rand and 93 cents. We started the year at around 14 Rand 56, so not necessarily back to those levels, but still faring better. If we remain below 15 Rand, it certainly does look better from an aesthetic point of view. Also another 1% gain for both the euro and the British pound. We're at 18 Rand and 10 cents. Do we get below 18 Rand? That's perhaps a question mark out on that front. 20 Rand 33 as well against the British pound. All of this is quite significant then as we head towards that budget speech, of course, by the Finance Minister Tito Mboweni. A date perhaps not set at yet, but of course key questions around whether we'll get a tax hike. Maybe they'll move the budget deficit along as well, or perhaps look towards some other methods as well of paying for that vaccine. 20 billion Rand around the figure that is being looked at as well. A big gain for Brent crude, 1.4%. Also a big gain for platinum as it sits at $1,100 a fine ounce there. So that's closer look at your market picture, though, we'll, of course, get a swifter look as things progress throughout the week. Now, the immediate impact of COVID-19 does threaten to scale back years of progress in the fight against poverty and inequality. That is according to the World Bank, or rather the World Economic Forum's Global Risk Report. We're going to unpack that for you next. Now, the immediate human and economic cost of COVID-19 is severe, and it also threatens to scale back years of progress on reducing poverty as well as inequality. That's according to the World Economic Forum's Global Risk Report, which was released earlier. Now, it says that the coronavirus also threatens to further weaken social cohesion as well as global cooperation, an element we've seen for so many years. The report says that job losses, a widening digital divide, and an abrupt shift in markets could lead to dire consequences and even lost opportunities, particularly in large parts of the global population. Now, the World Economic Forum says the global economy is at its deepest peacetime slump. World output is expected to have contracted by 4.4% in the past year. The report says that for the first time in 2 decades, global poverty is actually increasing, and that the economic recession will likely lead to about 150 million people living in extreme poverty. It says one of the main worries for the coming years is inequality and societal fragmentation, and this will bring long-term consequences if not addressed. Now, the report says going forward, economic growth should be inclusive and create decent jobs as well as being sustainable. Let's chat now to Emilio Franco, who is the World Economic Forum's head of global risks and geopolitical agenda. Emilio, thank you so much for the time. Now, the Global Risks Report spoke about pandemics, and that was back in 2006. Let's talk about the scenarios that may have painted. Always good to look back, perhaps, before we even continue looking forward.
Absolutely. It's important to look back, not only to test what we knew, but also to draw lessons. And as you correctly point out, not only in 2006, but in fact for the last 15 years, the Global Risk Report has been warning about the threat of infectious diseases. In 2016, more recently, we warned that Ebola was not going to be the last epidemic. In 2018 and 2019, we also warned of the risks from biological threats and antimicrobial resistance. And as a matter of fact, just last year, as the pandemic was beginning in January of 2020, we warned that health systems globally were largely unprepared to handle accumulating risks, pandemics among them. So the warnings were made. Going forward, however, there is an opportunity to draw lessons from what worked and what didn't from this pandemic, not only to prepare ourselves for the next one, but also to build global resilience going forward. And this is one of the main points that the report makes, the opportunity to harness this awareness of global risks and the fact that the world really needs to wake up to long-term risks. It's not enough just to react to them. We have to be resilient against them.
Yeah. I mean, at present, of course, we're still going through this pandemic, and obviously it's very critical and important for us to get through this one in order to look towards any sort of upcoming pandemic, if that ever becomes the case. Is there a sense of understanding as to where another pandemic would come from in a time like this? I mean, considering that in 2006 we did speak about all of these risks and the issues, what are the big risks that would create another pandemic perhaps in future? Things that we're a little more perhaps careless or unaware of?
Well, first let's look at the evidence. Every 4 months a new infectious disease appears somewhere in the world, and 75% of them come from animals. So the risk is there that this won't be the last pandemic. Now, what could make the next pandemic worse, that has already been revealed by this one, namely the lack of access that many people have had to health systems. Before the pandemic, 50% of the global population lacked access to essential healthcare. Before the pandemic, almost 100 million people were being pushed into extreme poverty because out-of-pocket expenses. In Africa, particularly, many people are 3 hours away from the nearest health facility. So the first step towards preparing for the next pandemic, whenever it may be, is precisely to have a more accessible and inclusive health system. That is a precursor to prepare for the next pandemic.
Yeah, that must add then to the risks of inequality, right? I mean, it just sort of heightens the point then that if you don't deal with the inequality issues right now, you're certainly going to create even bigger situations and systemic ones a little later as well, right?
Indeed, the world was already facing some concerning trends with respect to inequality. In some countries it was rising, in some other it was decreasing. But the fact was that since the 2008-2009 financial crisis, this became exposed. Now those are very much still a concern, but going forward there are new ones. Let me direct your attention to one in particular, that of digital inequality, which, as our survey indicates, is one of the top long-term risks that the world will face. And this has only been accelerated by moving fast forward into the fourth industrial revolution. And not everyone can work remotely. Not all students are able to go to school online. And in fact, 60% of adults currently lack the basic digital skills to succeed in a world where technology will be fundamental. So this is a trend that is only made worse by COVID-19. Another one, it was also made clear that many jobs were highly vulnerable to shocks because they lacked social protection, because they had weak contracts. And this is of particular concern because there are 2 billion informal workers globally which lack a safety net to future crises, not just a pandemic, but think about another economic slump or so on. So while existing inequalities remain a concern, other ones will emerge.
Emilio, you speak in the report particularly about a fragmentation in the globe, social cohesion coming apart. How significant and how important is that process going to be, or that lack thereof, in future when you have another risk coming to the globe, whether it be in the form of another pandemic or even perhaps a financial crisis of any sort as well? How much impact will that play in trying to get a solution for future situations?
It will have a major impact, and that is the main point that the report is trying to draw attention towards, that it's not enough to have economic growth. It's not enough to ensure digital connectivity, and it's not even enough to strengthen global cooperation. These are all necessary, but without social cohesion within borders, it will be very challenging to harness support to tackle global crisis. Social cohesion is a precursor to build resilience, and it is a main concern that is shared horizontally across countries that will challenge the recovery. But this is also an opportunity to ensure a better recovery. We've been talking a lot about the return to normality, but what we should be talking about is the return to a better growth path. It's not just about growing, it's about being more sustainable, it's about being more cohesive, and these are all assets that will only strengthen social cohesion, which again is a precursor to tackle the next crisis whenever it comes.
Yeah. Emilio, just perhaps another one with regards to this. I mean, we're getting to perhaps a cycle here within the sphere where we're beginning to look at how best we can deal with things, whether it be vaccines, the globalization, of course, of such issues as well. Do you think that the world gets into a situation where the risks become heightened as we try to globalize a whole lot more? Should we perhaps be looking a little bit back? Or, is that process sort of right in terms of looking forward and trying to find solutions together as a group?
Well, global risks by definition need to be met with a global response. This pandemic has shown that no country on its own has been able to fare perfectly, securing supplies, keeping their economies afloat. The same goes for climate change. It's not a risk that a single country will be able to mitigate. Now, that's one part. The other part is that globalization, while it has its challenges, it is also the way forward. Trade is a very powerful tool to boost the economies. Technological exchange will be fundamental going forward, and not all countries are capable of fast forwarding into the fourth industrial revolution. They will need to cooperate within each other. And lastly, the multilateral system. While there's also some opportunities for improvement, it's also true that it is one of our strongest tools to address a global crisis. Namely, the vaccination efforts, the sharing of information, the harnessing of support, and having a platform for discussion, which is precisely what the World Economic Forum embodies: the need for public-private cooperation at a global level that amalgamates with what we need to do within our borders.
So interesting. This conversation could really go for quite a while, Emilio. We could talk about so many other issues as well. Emilio Franco, really appreciate the time. Thank you so much for joining us there from the World Economic Forum then as well, as we just try to talk about the global risks, which could indeed get even worse from here on in. The pandemic isn't necessarily the last we've seen globally, and it certainly could get worse. We'll talk about a whole lot of other issues as well on the international front. Next, stay tuned. Now, National Treasury has put an increase in tax as one of the options to fund the COVID-19 vaccine. Experts say this is already being implemented even in other countries. Earlier on, we spoke to Marcus Buerta, who is the BDO head of corporate tax consulting, and he says a tax hike will hit the taxpayer very hard.
As far as the comments that the DG made, other countries have already introduced taxes like that. In the news cycle currently, we have Argentina, who has introduced a wealth tax on assets, so not on income. So if you have assets to the value of X amount, then you're going to be paying a wealth tax. Unfortunately, the funding is going to have to come from somewhere, and it's the taxpayer that has to foot the bill. So it doesn't matter what the funding option is that government look at, whether it's going out and getting additional loans and debt. At the end of the day, it just means that the taxpayer is not going to foot the bill in the short term, but we're going to repay those loans in the medium, longer term. Whatever the options are, it's going to come back to us.
All right, then with that, then let's take a look at what other African markets are looking like at present. Well, that brings things to an end then here at the Johannesburg Stock Exchange. Thank you again so much for joining us this afternoon. My colleague Nompumelelo Siziba does join you then at the top of the hour to give you your latest when it comes to this news cycle, of course. Duduzi Mthembu does have your weather details though, and he comes up right after this too, so please do stay tuned for that. From me though and the team here at the JSE, that's where the buck stops.